in the session recap for today, I'll do London and New York, as obviously I was out of the office this morning, so I didn't get a chance to do the London one. Pretty tricky price action, particularly on EU for the last few days. And it's all very well saying price action isn't that clean. You need to be more cautious in the M15, etc., etc. But how do you actually know this? How do you actually identify this? And in my opinion, the key is the daily. So you look at the daily, where are we sitting? We've had the break structure, so we know the following the break structure, we can expect a pullback, right? Following the break structure, what happened? Pull back into demand, and we pushed up. Then what happened? We had a sweep of liquidity. Now we know that whenever we're going to get like a decent pullback or a trend change or anything like that, there usually is precipitated by a sweep of liquidity. So we swept the liquidity and we mitigated daily supply. So it's very likely that this daily supply will be the catalyst for the deeper pullback. Now, obviously, we don't know that it is definitely going to happen, but we know it's pretty decent chance that that is going to be the catalyst for the deeper pullback. However, so far, what has it done? Just pulled back into demand, which caused price to sweep the high. So at the moment, it's not clear who is in control, supply or demand. We mitigated the high probability supply, but so far all that has done is facilitate a pullback in the demand. It hasn't caused the bearish chalk, it hasn't caused the bearish IBOS, hasn't caused anything, because the chalk line is there. So supply is not in control currently. Is demand in control? Well, you can see we pulled back into demand. So obviously, if this demand is going to hold, we'd expect price to push up and at least close above here, ideally close above here. But instead, what happened? We pulled back into it, we tried to push up, failed to take it out, and then push down. So based on the daily, it's the quintessential battle between supply and demand currently. We know that it's possible we could see a deeper pullback, but we have no confirmation that that is going to happen yet. And yeah, we haven't had demand fail, we haven't had a bearish chalk. So at this point, it literally could go anywhere. But the last few days, you've basically been trading. Price tried to push up, failed to take it out. So this low is potentially weak. So yes, it didn't break that much structure. It caused a bullish eye chop, if you want to call it. But it's just trying to buy from this leg, regardless of what was happening in the M15. A slightly lower probability is once it failed to take out these highs, then it was always likely that this low was going to be run. But the key, if you found the going tough the last few days, the key is to really study the daily chart and just understand, when the daily is making sort of clear higher highs, higher lows, we have clear intentions here. We pulled back, we mitigated the daily demand, we internal switch bullish. This is the high probability daily framework where you can see swing and internals aligned, you're following the bullish order flow to take out that high, whereas here it's not clear what's going to happen. We know that we could see the pullback, we know that we could keep pushing higher, but at the moment it's not clear which is going to happen. So the big lesson is just, when the daily is like this and things aren't clear, it's a very, very, very good sign to sort of sit in your hands, be more conservative in the M15. Doesn't mean you can't trade it, but just, if you find the last few days difficult, the answer probably lies in the daily. And the 4-hour is an absolute mess as well. So as I've been sort of saying for the last week or so, last couple of weeks probably, we technically got a bullish break structure here. However, it wasn't that convincing because price didn't close above this wick. So in theory, try and keep my swing structure as mechanical as possible. So that is a strong swing low because we did get the close above the swing high, which was here. But just I wasn't that convinced by it because again, price failed to close above that wick. So we had come into this demand here. Again, that demand, it's the extreme unmitigated demand within the bullish range because you can see everything down here was mitigated. So that was the obvious demand. It's where the demand came into the market that caused the bullish break structure. We pulled back into it and we pushed up and we had a bullish chalk. What I had marked as a bullish chalk. Now obviously, now that this demand has failed to follow through and we've run this low and run this low, it's obvious in hindsight that was a sweep of liquidity. But at the time it made sense that it was a bullish chalk. So I have my internal as bearish. Just again, that was me using a slight bit of discretion, just following this sweep of liquidity here. It made sense that leg caused the sweep of liquidity, so price closing below that was enough for me to say that my internal is bearish. And you can see I had the bearish IBOS, pull back to the extreme of the internal range, which unfortunately in this instance was the bullish break structure as well, which is what slightly confused things. And then now we have swept the weak internal low. So we're basically looking to trade this demand this morning. Again, it made sense to look for longs. They're pro 4-hour trend, swing trend, counter 4-hour internal trend. And again, you know, no one went to be more conservative on the M15 when you've sort of no clear intention of the 4-hour. Like, you can argue it's bullish, you can argue it's bearish. You know, you could argue that's a weak internal low, but then this demand was the demand which caused the break structure. So in theory, and it's the extreme unmitigated demand in the range, so in theory it should push through. Had a bullish chalk, which is a pretty decent signal that it's going to hold, but then obviously the internal in this case has taken precedence, and we pushed down and swept this low. So there were some potential buys here this morning, which again were valid, but again, just understanding that, you know, when 4-hour swing and internal are misaligned, the daily isn't clear. Again, that's just when you want to be, you know, a lot more cautious on the M15. Now, the M15 today, let's take it back to where we were at session open. I'll mark this up in the moment, just some of you might benefit from seeing that. So my M15 swing was bearish. This was my most recent break structure. I don't know why that line's not on. So this is my strong low. So again, buys were counter M15 swing, but pro M15 internal, because you can see we had this push up and price did close above the high. Now again, it barely closed above, and then we had sort of a pretty sharp retrace, so it wasn't the most convincing, but again, it's a valid eye loss, so it's closed above. Had this demand here. So again, that's sort of the last clear unmitigated demand in this range. So if the bullish internal trend is to continue, you would expect price to mitigate this demand and continue higher. But again, you have to remember, it's counter swing. Now, what did we have here? Got a bullish chalk. Sorry, the magnet's not on. Let's do that right. Had the bullish chalk. We then swept the low, so that's your textbook strong liquidation. So now what are we looking for? We've had the liquidation, so we're looking for the PBL, which is there. So we want to see that fail. Now, so play it on, see what happens. So we get the reaction to the PBL. So still no chalk. The chalk is at this red line. So a bullish chalk and a PBL fail is a pretty decent signal to look for a long. The one thing that I was sort of wary of here was this range was completely unmitigated. You can see that price moved impulsively out of it and hadn't pulled back into it. So it's very possible, like, you know, generally you want price to sort of follow the mitigation. So when there's something unmitigated, it's always possible that there'll be sort of a temporary shift in price to mitigate the unmitigated range, and then the price will then continue in the direction, and you can get caught on the wrong side of the market easily. So we've played on. So I had the bullish M15 chalk. Obviously have the flip there, which is at the inside bar, and that's valid demand, but obviously it didn't sweep liquidity. So, and the extreme was unmitigated, so the extreme was the favourable one. And of course, with the inside bar and the flip there, we had M15 lid as well. So that's very nice. So I've had this strong liquidation, bullish M15 chalk from M15 demand nested in 4-hour demand at the extreme of the M15 bullish internal range. So it's valid to look for buys at this point. But again, just being wary of trading against this range. So we've played on, come up, mitigate this range, which as I said, it was always possible the price is just going to push up to mitigate that range before continuing lower, because again, M15 swing was bearish. See, strong bearish reaction, but then obviously swept the lid and mitigated the extreme, which is obviously, it would have been valid to leave a risk entry here. You could have just viewed this as the first IBOS of the continuation of the trend. I personally was waiting on a confirmation entry on the M15 just because we have mitigated this range, which is unmitigated, and the 4-hour and the M15 or the 4-hour and the daily were a bit of a mess. So I just wanted to be slightly more conservative. But the confirmation entry didn't set up, so I avoided taking a loss in this instance. But the risk entry was valid. And then if we drop down to the M1, so we swapped the lid in the M15 demand, PBL, these wicks. So we've had a bullish chalk, but obviously want to see the PBL fail before looking for an entry. So we've mitigated the PBL now, we're getting a bit of reaction. Come down, sweep this here, which again is nice to have. You've basically got your flip that swept then. You can see there's a decent amount of momentum in the market as well. So it's nice. So want to see ideally the PBL fail, which is a close above the dashed line there. See if we come up. Did close above, so it was valid to enter here. Completely valid loss. It's a slightly tricky one where to enter. The extreme's already mitigated. There's that inside bar there. But yeah, it depends what your own plan says where you want to enter there. And there's a loss anyway. But it was completely valid. You know, it made sense. You know, following the M15 strong liquidation and bullish chalk, then it more than made sense to look for longs. You had the lid in front of the M15 extreme. That was the place to get long. PBL flip swap liquidity. It's completely valid. Again, the fact the price just closed above the flip there. You know, if price had a wick that there, then that might have kept you out of that. But it's a valid setup. And then if you go back to the M15. So now, obviously push down. Can view this as a sweep of liquidity. Obviously at the time we had it as a bullish shock, but now you can see it's a that has failed. So we can now say we've had another IBOS. An IBOS, sorry, because obviously the large internal. So yeah, you can see here the bullish chalk was just to mitigate this range, which was completely unmitigated. So that sort of, you know, when you're taking M15 risk entries or whatever, you just want to always be careful of, you know, what you're trading against. And while it's still valid to take the risk entry there, you know, just that explains why it didn't work out, and maybe that's something you might want to add into your plan. Not trading against unmitigated range mitigations. That is the obvious supply at the extreme of this range. So, you know, small internals bearish. We've had the failed reaction to the 4-hour demand. We've had a sweep liquidity, decent amount of bearish momentum. It is completely valid to just keep following the bearish order flow at this point because M15 swing is bearish overall. So if you play it on, see, ideally, obviously that was where I wanted to get short from, but unfortunately price didn't mitigate it. And this is just coming into the start of New York session. You can see, again, impulsive breakout of the range. We did mitigate this range with the wick, so it's less likely the price is going to come back to this pivot now. If that range was completely unmitigated, then it's more likely the price is going to come back here. But the fact that it did mitigate the range means it's less likely. So the obvious supply within this range is there. Again, you can draw it like that there, cover as much of the range as you want. So small internal, large internal, and swing are all bearish now at this point, so sells are pretty high probability. But again, unfortunately, didn't pull back into the range, didn't pull back into the pivot, and yeah, no potential entry there. Here, swap the M15 swing low. Let's see here. So it's a swing low again. If you're going to be trading liquidity sweeps, you know, the more structurally significant the higher low that gets swept, the better. Swing low, it's going to be lots of liquidity behind it, so it is valid to look for an M1 entry model. Just drop down to M1. Again, don't really encourage people to take the liquidity entry model for, you know, following sweep until you're more experienced, because it is easy to get caught out sort of trading in significant sweeps. But here you can see we swapped the significant low. See, swap liquidity as well. So that was nice too. Still no flip or chalk, but there you can see got the flip and chalk. So again, slightly tricky where you want to enter. Just cover as much of that as possible would be my advice. You can see strong V-shape recovery out of it. So the M1 PBL field, flip chalk, V-shape, flip that swept, enter on the flip. All good. Again here, you want to be avoiding trading against the mitigation in the M15 PBL because it's possible the following sweep liquidity price will just mitigate this and then continue lower. So if you're getting in here, you want to sort of price pull back in now, and then you get to break even before price mitigates this, and then that way if price comes back down, you take a break even, nothing ventured, nothing gained. Whereas if you leave your entry open here, following the mitigation of this, then it's easy to get smashed, and you just wonder, oh, what did I do wrong? Well, you traded against the M15 PBL, play it on, see, mitigated the M15 PBL. And yeah, it's entirely possible that price will continue lower from the M15 PBL, so this wouldn't have been tagged on this entry, but yeah, it was valid. And then if just jump back out to the M15, yeah, so it remains to be seen. The M15 PBL is still holding, so it's completely possible that price will push lower and that we will get the close below the swing low, and then hopefully that will give us clear intentions coming into session tomorrow. However, it's CPI tomorrow lunchtime, I believe, which is pretty much the highest impact news at the minute, so it'll probably be tricky to get involved in on. So that was AU today. Hopefully explained, this was quite an interesting piece of price, hopefully explained my thought process, went through it clearly. Yeah, and then this afternoon just pretty much sold off, didn't mitigate anything. There was the potential liquidity entry model following the sweep, but one to be tagged on it, and now it remains to be seen whether the PBL is going to hold in M15. So that is AU. And AU. Again, been beating a dead dog for the last while, but the daily's been a mess. Obviously, swinging and turning both bearish, so ultimately expecting this low to go, but we've pretty much been stuck in this messy range for the last, that started on the 10th of March, so 2 months pretty much. Following this sweep of liquidity and the bearish chalk, I had hoped that we were going to run this low and perhaps mitigate this demand, but you can see we had this supply here, got a reaction to it, reaction failed, so I'd say at this point it's very likely this high is going to get run and we will mitigate this supply at a minimum. So yeah, again on the daily, nothing that clear, but expecting that high to be run, which obviously fits with the 4 hour as well. So 4 hour, you can see, has been a mess. Bullish following this break structure, so this is our strong low. You can see we had the sort of complex pullback, mitigated the wick demand at the extreme, and then internal switch bullish, and demand has been holding since. So swinging internal bullish at this point, so obviously we're expecting this high to go, which again fits with the daily thesis. Today we came up, didn't quite take out the high, came very close, but didn't quite do it, and yeah, today we had pulled back in this demand, which is entirely possible that we'll fill up more orders here and then continue higher, and then we'll get the break structure. And you can see this range was already mitigated, so it's less likely the price is going to come down there. It's likely that this will be the demand, which will follow through. But again, given how AU's been behaving the last couple of months, it wouldn't surprise me if price just came down here again. There's been very little clear signs of intention, but overall mitigated this demand, swinging internal bullish, expecting price to run the high, perhaps in the mitigation of this demand. So that was that. Now, take this back to where we were this morning. So M15 was pretty clean. I had this as my swing break structure, so this was my bullish leg. Bearish IBOS, again another bearish IBOS, so that's the internal switch and bearish, which is likely to facilitate the swing pullback. We've mitigated the EQ now. You can see there's the EQ here, so you can see this wick tapped into it. So coming into session this morning, it was possible that the pullback is complete and price is going to continue higher and run the weekend 15 high, which again lines up to the 4 hour and the daily. But this was the protected internal high. That was the supply at the extreme. So it was entirely possible that the pullback would continue. Wanted to see ideally a close above that high to signal that the pullback is over before confidently looking for buys. We play it on. You can see got the bearish M15 shock flip. So no IBOS yet, no close below here, but was still valid at this point to look for price to pull back in here, to look for sells. That was the obvious POI, it was the flip zone that led to the shock. But as you can see, price kept pushing down again and swept it low again. Bit of a pullback, but again, the pullback didn't mitigate any supply that I want to trade from. That was really the only POI that I would have wanted to be looking for an entry there. But then following sort of sweep, continued lower, another bearish IBOS. In terms of buys, the place I ideally wanted to get long from is obviously down here. It's the extreme of the M15 range, swept liquidity, it had inducement with the inside bar. Had this POI as well, which I was aware of, but it didn't sweep and didn't have inducement, so it's all likely to fail. At this point, could have looked for a sell from here. It's valid. It's valid supply. As you can see, it's a flip zone. We reacted to this little range here, so it's completely valid, but we just kept selling off, like mitigating it. And then coming in New York, we had a bullish chalk there, but again, bullish chalk. You could have got aggressive looking for buys from that demand, but you just have to understand that yes, it's possible that that could be the first sign that demand is taking control, and that is going to happen. But you just have to understand that it's equally as probable that we'll just maybe mitigate that supply and then continue lower again, because it's only a chalk. You know, ideally you want a strong internal high to go for confirmation that the pullback's over. So it was valid to be aggressive there. We mitigated 4 hour demand, but this was ideally the POI that I wanted to trade from. See, price just sort of range around. You can see not that much momentum. Mitigated this a little. No, we just missed the range. But yeah, came down. Another bearish IBOS, so pullback is continuing. Again, didn't mitigate any noteworthy supply there that we could have traded from, so just sort of watching it sell off. Again, as I identified, this demand wasn't the best. No inducement, didn't sweep, so it was very likely to get swept. So pretty much just waiting on the extreme down here at this point. So we swept the lid. It's valid to look for a liquidity entry model at this point. However, as I said, on EU, you want sort of the more significant the low, the better. And in this instance, this was only an inside bar. It wasn't that significant, but it was valid nonetheless. Play it on now. Was valid. You can see with the M1 PBL had the liquidation V shape, PBL failure, shock. Extreme was the obvious place to enter. That's a nothing candle. That's pretty much just entering on wicks. So wouldn't be interested in entering there. But as you can see in this case, it held. Wouldn't personally leave an entry there, but there was no tag in the extreme. So that was valid. M15 internal was still bearish. So had this high here, which could be used as a lid inducement for the extreme. So possible again, the price could mitigate this here and then come down and mitigate the extreme. So it was valid to look for a sell from within here. But again, you just have to understand that you're still playing the swing pullback at this point. We've mitigated pretty much the premium or the discount of the range. Like the EQ is there. Like this is deep in the discount. Like, you know, the further into the discount you go when you keep selling, then the higher probability there is of basically getting smashed on the wrong side of the market, particularly when we're expecting the high to go on the 4 hour and the daily. So we are expecting that the highest probability move for the M15 is for the bullish M15 trend to continue. Put it on, came into the extreme, swept the lid, but the M1 PBL held. You can see that was the liquidation there, pull back into this range and continued higher. So no strong liquidation, but clear V-shaped recovery and shock there, but no tag in the extreme on it. And then that was pretty much that. Yeah, I think put another, swept this low, but it was outside session hours on it, so wouldn't have been looking for on the M1 at that point. But internal still technically bearish, fail to take out this low, which is potentially a sign of bullish intent, and we still have this very clear extreme. The price may want to come down and mitigate. So not really much by way of entries on AU today, as is pretty typical. It is a tendency to just do where it mitigates the M15 POI and just runs without pulling back. But yeah, that's my thoughts on the structure from the daily down. Hopefully you took some value from that. Yeah, hopefully enjoyed the recap. Hopefully you took some valuable lessons from it. I think the lesson about sort of the daily and the 4 hour being unclear on M15 on AU is a pretty good one, as it's something that we all sort of have to learn. It's something I have to improve on myself, is like knowing definitively when to sort of sit my hands, regardless of how good the M15 is looking. But yeah, hopefully you took some value from that, and if you have any questions on it, just hit me up on one of the channels on Discord and I'll get back to you. Thanks very much, guys.